All right. Hello, everyone. This is not our podcast behind the designs, but instead, this is a new monthly video that we are going to be bringing to you about investments. So, I'm Michelle Smollenberger, the CEO here at Financial Design Studio, and I have Rob Stoll with us. He is our CIO, our Chief Investment Officer. The goal of these videos is really to help inform you, answer questions, and just talk about investments, which is something that you probably hear a lot about in the news, but also have questions about. So, welcome, Rob. I know we're excited to talk about investments.
Yeah, a new thing. You gotta love new things. And yeah, this is something we've talked about doing for a while and updating clients on what is going on in the market, what we're seeing, what we're thinking about, just to try to kind of bring a new way to do that other than the quarterly newsletter.
Yeah, Rob, you also write a lot. So we know the quarterly newsletter, you're usually writing about investments. What's interesting is, though, is like even in a quarter, there can be so many things that can happen.
And I think having a more regular cadence, there's always a lot of stuff going on, especially these days. There's a lot of news, a lot of things affecting the market. So it's good to just kind of have that regular update and for clients to hear what is going on. And because they've entrusted us to manage their retirement wealth, and we want to do it diligently, but we also want people to be informed. So.
Yeah. So this is a great way that we can kind of show you what, is going on on a regular basis that Rob's watching, thinking about. So at the end, we'll encourage this again, but any questions that you have, please let us know because that is the purpose, is that this is helpful for you. All right. So we're going to just open this up. This is our first one. So Rob, why don't you just kind of give us a very high level, just kind of how's the market, a general market summary for where we're at year to date. So just to kind of timestamp this is October, end of October 2025, as we're looking at this.
Yeah. I mean, it's been a phenomenal year for markets everywhere. So it's really been hard not to make money this year. Both U.S. stocks are doing well, international stocks are doing great, bonds are doing really well. It's been kind of a rough several years for bonds from like 2021 through last year, but they're doing really well this year. And yeah, commodities are up, gold is up. There aren't a lot of places around the globe, honestly, that aren't doing well. So, it's been a very good year, but tumultuous as well. We've had tariff announcements, which kind of created a lot of volatility back in April, and we still get occasional tariff announcements that will hit the market for a day or two. We've got the government shutdown going on, and there's been more and more chatter, as we'll kind of get into, about whether we're in some sort of stock market bubble with AI stocks. Are they exhibiting bubble characteristics, things like that?
Yeah, both topics which we're going to cover in detail today, so that'll be good. Okay, so let's go ahead and talk about kind of this government shutdown. This is what everybody's kind of thinking of, hearing of, and what I think we really want to dig into is how is this affecting the market? How will it affect the market if it will it affect the market if it continues on? So kind of touch on that, your thoughts for this so far.
Yeah, so it's funny because government shutdowns in the past, people used to get really wigged out about them. So markets would get really nervous, bond markets would get really nervous, and the news would just be going crazy every single day that the government was shut down. It's really interesting this time around. The government shut down on October 1st. We're now in October 22nd, and it's in the news, obviously, that the government is shut down and there's potentially some layoffs and national parks are closed, things like that. But I mean, from a market perspective, there really hasn't been any impact whatsoever. So since this all started, the S&P 500 is actually up a little bit. Bond markets are doing pretty well, and you haven't really seen any sort of panic at all. So it's been pretty interesting to just kind of note that, because again, like I said, in past episodes, if you go all the way back in the mid 90s, that was one of the big shutdowns in Clinton's first term, I think it was. That really created a lot of volatility. And then there's been, shutdowns here and there that created volatility.
Yeah.
But this time around, so far so good. Not sure how long that can last, but I'm also not sure what the catalyst would be for the market to really care about it anytime in, call it coming days or weeks. So
Yeah. Yeah, when we think about, I guess when we hear about the shutdown, I feel like we normally kind of hear people talking about like something very specific. Will Social Security continue getting paid? Our defense, like things like that, Department of Defense, will those checks continue going out? That's what people are concerned about the most, when I've heard about some of those things happening.
yeah, when they talk about government shutdowns, I mean, obviously there are things that do get shut down. So, I mean, like national parks, I mentioned, a lot of government functions, paychecks aren't going out for a lot of government employees. But when it comes to critical functions, Social Security payments, Medicare, defense, those they have workarounds to keep all that stuff going. So, I wouldn't worry about that if I'm living on Social Security. I would not be worried about not getting your check next month. That will come through. They have fixes for that. Where it does get a little dicey, as I said, government employees. I know there's been a lot of talk about air traffic controllers aren't getting paid, and some other agencies. There's employees not getting paid, and we all talk about having emergency funds set aside, but not everybody has that. And when you don't have a paycheck come in all of a sudden, that can certainly create some pain and anguish. So there is that going on out there. And I think that'll ultimately be what kind of pushes Congress towards some sort of resolution is that you just can't leave people hanging like that. They got to get paid. They need their paychecks. They're coming into work every day, mind you. And so I suspect that will probably push a resolution here in the next couple weeks, um but yeah, I mean, we'll see.
Yeah, that's what I was going to ask. Do you feel like you've heard any meaningful progress towards this ending? It doesn't really seem in general that there seems to be any, compromise like imminent.
Oh, no, that's what's so weird about this. I mean, like I said, it was seen as such a bad scenario to have the government shut down that ultimately it pushed the two sides to come together and come up with a fix relatively quickly. But, like I said, we're 3 weeks into this thing, and I check the news every day and I'm not seeing any meaningful effort. I mean, there is effort
Yeah.
underway to resolve this, but I think both sides have kind of dug in on their positions. And, until there's some sort of catalyst for prompting Congress to act, I mean, that's ultimately the only time they really do stuff is when their backs are against the wall and they have to do it.
Yeah.
So the fact that the government and the country is kind of, maintaining course without any huge negative impact, I think that's given both sides some room to just kind of dig their heels in and say, we're not going to compromise. But like I said, I think we're probably coming up on a point here in the next week or two where that will probably change just because there are real people not getting paid. I just saw a thing yesterday that 43,000 employees might actually get laid off by the end of the month if there's not some sort of resolution. So, it's coming, but I mean, there really has not been a lot of movement since this started 3 weeks ago.
Yeah. And just to kind of refresh people's memory, if they aren't even sure why is the government shut down?
Yeah, so this is a continuing resolution to kind of keep the government funded and operational going forward. And whenever these things happen, there's always fights about what's included, what's not included. The one thing that's changed since President Trump came on board is this focus on the Department of Government Efficiency, DOGE. And, it kind of started with a bang, and then he had a falling out with Elon Musk, and it seemed like the whole Doge thing was falling apart. But that's actually one of the key things they're fighting about right now, because there were some programs that Doge had identified that, in their view, should not be funded, and, U.S. aid, some foreign aid, things like that. And part of what the GOP wants to do is they want to actually codify those spending cuts. They call it rescission, I think, and the Democrats are not for that at all. So, I think there's some Doge related fights here, but the big one that is really kind of catching the news and what the Democrats are pushing is this. The Obamacare Marketplace Affordable Care Act subsidies. So you go back to when Obamacare passed in 2010, that law created subsidies for people that lower income. If a plan normally would cost $1,000, but your income is below a certain threshold, will actually give you what's called a premium tax credit to offset some of the costs. So that's been a part of the marketplace health insurance regime for the last 15 years. What changed during COVID is when President Biden was elected in 2021. His first kind of COVID stimulus bill created an expansion of these subsidies. So they removed an income cap that allowed a lot more people to get subsidized healthcare premiums. And then with the Inflation Reduction Act in 2022, they actually extended that through this year. So when they passed that law a couple of years ago, is scheduled to stop at the end of this year, and what the Democrats are fighting for is for that to be extended even more, and because that will create a lot of premium increases for people who normally were not covered under that premium tax subsidy prior to the expansion in 2021. So that's really the big thing that's kind of holding things up right now. And you can imagine there's a lot of, scare on both sides about what it would mean if we did or did not do this.
Yeah.
I don't really know how that's going to get resolved, to be honest with you. But, that's kind of the big thing.
Yeah, yeah. Well, and I do want to mention we do have some articles on some of these specific things that if you missed it or you want to go back and look at that, just we did do a webinar kind of on Doge where we talked about that specifically back in the spring. And then we did have an article on Doge in February, and then just an article kind of talking about tariffs specifically, since we had mentioned that back in May. So there are some articles if you kind of want to dig into each of those specifically and, hear more of that or read more of that. Those are out there as well. But I think, yeah, that's helpful. It's interesting that, we're now 3 weeks in and it doesn't feel like that long. But I do think the longer it goes on, people will be hearing about it more and people are affected by it more. So hopefully it will lead them, yeah, to take action and find some resolution.
Yeah, yeah.
As I mentioned, like with the government shutdown, there are different pieces that are affected. There's different people or different things that we're used to getting. One of those is just kind of key economic reports. So whether that's jobs, whether that's a consumer price index, there's different measures that, we as investors we're looking for to kind of see, well, has this changed? Should we be changing our investment philosophy? So talk through a little bit of what's happening here. Are we still getting that information? Can we still find these things out?
Yeah, yeah. So that's what's most curious to me about the lack of market reaction is, I mean, there's really two reports that matter to markets, other than when the Fed decides interest rates. It's really jobs reports and inflation reports. And jobs reports are normally released the first Friday of every month. They had to skip it this month, so the September jobs number that was supposed to be released at the beginning of this month, October, wasn't released, and that's kind of in limbo until this government shutdown ends. And then the consumer price index of inflation that usually comes out, I believe, the second week of every month. That's kind of on hiatus as well. They said, "Oh, we may release it this week that we're recording right now, but it looks like that'll get pushed off again." And it's these are really important numbers that investors look at because they gauge, how is the economy doing and how is inflation doing. There are other sources. So, like on jobs, there's ADP. Back in the day, you would get your paycheck and it would say ADP on it. They're like the big payroll company in the US, they release their own data every month. So, like a day or two before the jobs report was supposed to come out, they came out and said jobs in September were pretty weak
Hmm.
for the second month in a row. So there is data out there to at least kind of guide investors about what is going on, but it does create a vacuum because I mean all these reports and I mean housing starts, retail sales, I mean there's a lot of kind of reports, smaller reports that don't really impact the market, but all this data feeds into larger data sets like leading economic indicators and things like that. So the longer this goes on, the more, investors are kind of in a vacuum. And more importantly, it kind of puts the Fed in a tough spot because they rely on this data as well. So to the extent it's not coming out, they don't really know what's going on real time with the economy. And they have a meeting coming up next week. So where they have to decide interest rate policy.
Hmm. Just since we're on the topic of kind of the Fed and interest rates, is there any expectation that rates might move, or kind of is there any expectation of when the next rate cut might be?
Yeah, yeah. So they are almost certainly going to cut next week by a quarter point, so 0.25%. They will almost guarantee they're going to cut. So the market probability, I think, is like 96% that the market expects them to cut by a quarter point next week. So that's definitely going to happen. That was kind of built in a month or two ago. So as I mentioned, the jobs numbers have softened up quite a bit the last couple months, and that's created some room for the Fed to look at rate cuts. They were holding off because the economy was kind of chugging along. They weren't sure how tariff inflation was going to come through. And I think on both those things, jobs are softer, tariff inflation has come through in some areas, but really not a lot in general.
Yeah.
So that's given them an opening. They cut last at their last meeting by a quarter point. They'll cut by a quarter point this month, and then the market is expecting another quarter point cut in December.
Okay.
So that is probably going to happen regardless of what the data would be showing or not.
Okay.
But again, I mean, not having the data, when Jerome Powell gets on stage and takes Q&A, people are going to ask him, how are you determining whether to cut rates or not if you don't have the data? And that kind of is a tough question when you don't have it.
These rate cuts that you're mentioning, so these quarter points, are these actually driving like mortgage rates, borrowing rates as well? Or is this really just, something that doesn't affect those?
So it's funny. I mean, it should ultimately affect mortgage rates and borrowing rates coming down for
Okay.
sure.
Okay.
What has happened though is, if you flash back a year ago, the Fed had put through several rate cuts and mortgage rates not only didn't go down, they actually went up a little bit. So, there isn't like a one for one trade off between the Fed cutting rates and borrowing rates coming down, but borrowing rates are coming down. So, like mortgages, I think are closer to 6% than 7% at this point for a 30-year mortgage. And I think the market is getting more comfortable that the Fed is going to keep cutting and kind of get to what they call a neutral interest rate, which there's a lot of debate on that. But, basically that's like a point and a half lower, like 1.5% lower than where we're at right now. So mortgage rates will come down, auto lending rates will come down. And ultimately, I mean, what the Trump administration has been pushing for the Fed to cut rates is because as rates come down, that actually helps the budget a lot because we're currently spending over $1 trillion a year on interest on the government debt. So when rates were going up, it was kind of creating this vicious circle where that was worsening the debt, the budget deficit, and that was creating concerns with the market. Rates would go up more. They're really trying by kind of jawboning the Fed to cut rates. They're trying to break that cycle, and so that rates come down, interest costs come down, the deficit comes down, and you kind of work in a virtuous circle going the other way. Whether all that plays out, I don't know, but that's kind
Yeah.
of the thought with where the Fed is at right now.
Yeah, yeah. Okay. No, that's helpful just because I know a lot of times when people hear interest rate cuts, they're thinking, especially people that are thinking about buying homes or cars or things like
Hmm.
that and maybe borrowing. That's definitely one of the top concerns on their mind is what the interest rate's going to be. So that's helpful to
Yeah, I
understand.
mean, my wife and I just finished building a home, and I look at the mortgage rate we have, and I look at the sub 2-3% rates that some of our clients have, and I do have mortgage rate envy in a lot of cases.
Right?
So I'm
Yes.
right there rooting with a lot of people to get these things down.
Exactly. No, it's so interesting how, back when rates were so low, everybody was locking them in, but now when they're higher, it does make it harder to move, makes it harder to buy a new home. Yeah. So I guess in general, when we're talking about the shutdown, the market in general has really kind of just looked through this. Like you said, there really hasn't been a big impact. Do you feel like there's a certain point where at some point it might start to affect the market, or do you really think in general it's just kind of something that politicians need to get figured out?
Yeah, I think they just need to get it figured out. I mean, the way the market thinks is they have to get it figured out at some point. So I mean, it's not like keeping the government shut down forever is not an option. So it will get resolved, and they will, pay back pay and things like that to government employees that haven't been paid the last few weeks. So, I think the market's tolerance for this is a lot higher than what you might normally think.
Yeah.
Um, I think so. I don't think the market is going to force the two sides together. I think it really will be government employees potentially getting laid off. But the other aspect of this is we have open enrollment for the Affordable Care Act for marketplace health insurance opens on November 1st. And, that is an open enrollment period through kind of like mid late December, I think. And people need to know, what is the subsidy going to be? Because if you're kind of not quite, if your income is a little bit higher and you're towards this kind of, they call it a subsidy cliff, where, you'll get premium tax credits, but then you earn $1 more and you get nothing. A lot of people are going to be affected by that. And open enrollment starts in 9 days, 10 days. And if they don't have the government open and this subsidy issue figured out by then, that's going to create a lot of confusion. So
Yeah.
I do suspect that this will get resolved by the end of the month. I don't know how.
Yeah.
But that to me is the key catalyst for getting this done, is that marketplace health insurance open enrollment starts pretty soon.
Yeah. Yeah. No, that's a great point. All right. No, that's really helpful to kind of understand kind of this government shutdown piece. I feel like that's what we're hearing so much of today in the news. So let's kind of start to shift. This is something I'm starting to see more people talk about. It's something we've talked about for a while, but this is really the topic of kind of AI stocks and kind of are they in a bubble? And, it's interesting. I know it's something, we've been talking about in client meetings. And so we've been, and investing around, but kind of just talk us through, what this even is, what people are talking about, and how, kind of what are the signs, some of the signs that we're seeing, or what might lead us to think that we're in
Yeah,
near a bubble.
yeah. So I mean, this we're almost coming up on the 3-year anniversary when Chat GPT was rolled out, and kind of the first AI model that people could use. And that was really just a huge thing. I mean, that was like, okay, this is a really new, interesting technology that could have massive impacts on productivity and things like that. So really, for the last 3 years, any stock that is related to AI has just gone through the roof. And the most obvious one is Nvidia, because they make the chips. They're one of the sole chip suppliers for all these AI models, and that stock has just gone crazy, as a lot of people know, over the last several years. And as the whole AI frenzy has kind of continued over the last 3 years, these stocks have just gone up and up and up. And I think frankly, a lot of it is justified because if you look at the profits that Nvidia and Microsoft and some of these other AI related stocks, their earnings have just gone crazy the last couple of years. So there has been fundamental support for a lot of the stock moves and AI related um, companies.
Okay.
But I would say over the last month or two, really, there's been a lot more talk of an AI bubble. And I think where that's really coming from is there's been there's been a lot of announcements between AI companies. So like OpenAI, which does Chat GPT, they've announced big deals with Oracle. That sent Oracle stock up huge. And it seems like we went through a period over the last several weeks where there was almost like an announcement of the day and all the same companies kind of saying, we're going to all support each other and all these multi-billion or trillion-dollar deals and stocks are going up. And, it's kind of created this belief that we are kind of entering a more bubble-like phase of the market. And, I remember when I started my career in the late 90s, that was when the internet.com thing was getting going. And there was a point where any company that changed their name from XYZ to XYZ.com saw their stock go up just because all of a sudden it's like, oh, this is an internet stock. So
Mm-hmm.
you are actually starting to see a lot of that now. And I think there's a lot of concern at this point that the deals that are being announced aren't, I don't want to say they're not real, but when you look at the dollars and the commitment of dollars from some of these companies, it's like, where is this money going to
Mm-hmm.
come from? Because thus far, AI related revenues from these products aren't really that substantial. So, I think it is, last couple years as the stocks went up, there were a lot of like old dogs saying, "Oh, we're in a bubble, we're in a bubble." And I didn't really subscribe to that because there was real profit growth and a lot of these AI companies have really strong cash flows. So it wasn't, but I do think we're getting to the point where there's so much spending going on in this space that it does kind of remind you of the internet. There was no thought as to, are we actually going to get paid on these investments?
Yeah, yeah. No, I think that's really helpful because we've in the most recent years we've heard about even like kind of these Mag 7 stocks like the Magnificent 7, these large stocks, and I mean their prices have just been, rising substantially, and that's really what has been driving so much of the S&P 500. Are all of the Mag 7 stocks, are they all AI companies or affected, are they kind of rising because of AI, or is that kind of separate?
I mean, they generally are because the tech environment, just the way it is these days with venture capital and everything, it is like a proverbial gold rush. Like everybody wants to be first mover, everybody wants to get market share. It doesn't matter what it costs to do it. I think for a lot of these companies and a lot of the early stage investors, like there is no limit to the amount of money that they'll spend to kind of get
Mm,
that first mover advantage. And then,
mhm.
you ask them, well, what about the economics later? It's kind of like, well, we'll get to that once we get to that. Um, you know, it, you can look at a company like Uber a decade ago. I mean, they massively subsidized Uber rides and got people addicted to Uber, and then they went public, and it's like, okay, now we have to actually make some money at it. Now, the few times I've taken Uber, I've actually found, you know, myself flagging an old style yellow cab
Mhm.
because, I didn't have to wait for it, number one.
Yeah.
And number
Yeah.
two, they're actually kind of cheaper than Uber these days. So, um, so it is, yeah, I think there is that dynamic going on.
Okay. So when we kind of talk about like AI companies, like are there stocks in a bubble? And we talk about the Mag 7, would you say they're both kind of like getting to a point where they're overpriced based on the fundamentals?
I mean, if you look at current valuations of the S&P 500, we are pretty close to where we were in 2000 at the peak of the tech bubble. So, the kind of optimist or the new way of thinking is that's totally justified because these companies are big, they're growing, they throw off tons of cash, and there's a lot of truth to that. And I do think a lot of this rally, at least for Mag 7, has been driven by fundamentals. I mean, Nvidia's, I don't know the numbers off the top of my head, but I mean, their sales have like gone up 5 times in the last 3 years. So,
Mm-hmm.
you
Yeah.
know, there's real money being made on this stuff. But, you know, where I think the bubble talk is coming in is you're seeing, just as you saw during the dot-com gold rush, is people are saying Mag 7 is kind of played out. Like, I mean, they're going to win, they're winners, but the valuations are really high. So, what else could we invest in that is AI related that maybe hasn't really caught up to the Mag 7 yet? And, you know, that's where I have an interesting chart here, which I'll
Mm-hmm.
kind of share it real quick. One of the things that people are looking at right now is if you look at the share of profitless tech. So, you know, tech stocks in general, there's some that make money and there's some that don't.
Okay.
And if you look at the ones that don't make any money right now and you look at the performance over the last 12 months, I mean, these stocks have just ripped higher, and particularly in the last 2 months. So you kind of see that the red line here, that is the profitless tech. I mean,
Yeah.
they've done really, really well. They're up 60% in the last year. The companies that are actually making money, you know, kind of the more mature tech stocks that have been around for a while, I mean, they're still up 35%, but I mean, they're really being left in the dust by these profitless companies. And, you know, I think this is actually one of the key red flags in my own mind when you see profitless companies or really young companies that start seeing their stocks just go through the roof. I mean, to me, that is
Mhm.
pretty close because we saw the exact same thing during the tech bubble in the 90s.
Yeah. Well, I think it's interesting too, because depending on the news of the day, I know there's been different days where you've pointed out, oh, there was news on this company, like Caterpillar, some really off the
Yeah.
chart like company that you don't think of AI, you don't think of a tech company, and all of a sudden their stock is up several percent, and you're just kind of like, this is just classic behavior of what we see. Like if we are in a bubble, and that's where, you don't want to get caught in it, in the hype of it, and you're buying into it, and then knowing if it is a bubble, it's, whether it bursts or just gently shrinks, over time, you don't want to be caught kind of going into it at the height of it. So,
Yeah. Yeah.
I
Yeah. I
don't know.
think, I think there are a couple things that I'm concerned about, frankly. So, I mean, one of them, I'll just pull it up right here. Um, if you look at the concentration of the stock market right now, so what this chart looks at, this is put together by Goldman Sachs, and they cobbled data together over the last 100 years and looked at what percentage of the overall US stock market did the top 10 stocks comprise.
Mhm.
And, you know, usually if you kind of like drew a median line around here, generally speaking, that would be around, call it 20 to 22%
Mhm.
of the overall stock market would kind of be in these top 10 stocks. You can see right now, I mean, we are just massively above that.
Yeah.
Right now, the top 10 stocks are near, you know, 38% of the overall market. So when you go out and buy that diversified S&P 500 ETF, what you're actually getting is you put $1 and you're getting 40 cents of these 10 stocks. And then the other 60 cents is in 490 other stocks.
Mhm.
Historically speaking, the market is extremely concentrated. And if you go back through history, I mean, 1932 is the last time that Goldman is saying we've been this concentrated. But I mean, the key bear markets kind of during our own lifetimes, the Nifty 50 area of the early 70s, you can see that peak in 1973. That really marked a major top in the market. And then in 2000 with the tech bubble, that marked a major top in the market. And we've exceeded that by, you know, a fair amount at this point. And
Yeah.
I don't want to get into prognosticating about what the market, are we close to a peak or not? But, you know, I am a man of history, and I do believe that, you know, while things might look different from one cycle to the other, that the basic, you know, rhythm of market cycles is pretty similar. And the market is really concentrated. And I think that is a concern. for investors.
I think it's interesting too, because when we think about these different bubbles, so you have the dot com, now AI, it doesn't mean that there's not going to be companies that are going to be profitable. So it doesn't mean that there aren't good things that come from it. You kind of have this bubble, and then it kind of shakes out the real companies who are going to move forward with something meaningful through this technology and use it in their business to now continue to be profitable.
A natural question a lot of people have is, well, what is going to be the catalyst for this bubble to burst or for the AI frenzy to kind of end? And, I think that's speculative, but one thing I've been working on, and I'll just share another chart here, is um, where I think the rubber is going to start meeting the road is the power consumption.
Okay.
So, AI needs a lot of energy to run, and they're building data centers like crazy. And even in my area here in Wisconsin, just in the last, call it 2 months, there's been communities that have risen up against proposed data centers being built because of the sheer amount of electricity they need to run. And what people are saying and what people are speculating is electricity rates are actually starting to go up because all of a sudden you have this brand new demand center out there, these AI data centers that are sucking up a lot of energy. And if the amount of electricity being generated isn't going up, that just means that's basic supply and demand dynamics right there. Demand is going up, supply isn't going up, so prices go up.
Yeah.
I think a really good chart to kind of look at what the potential power demand for these things could be. If you look at where we are right now in the US, just focus on kind of the light blue, they need about 250 terawatt hours of energy per year to run these data centers. And I'm still working on, kind of all the math with what does that mean and all that. But roughly speaking, that's about 4% of the total electricity generated in the US each year. So, going from nothing to 4%, that's not going to move the needle a lot. But when you roll this thing out another 5 years, that electricity demand is expected to double. So instead of being, call it 4%, it's going to be 9 or 10% in 2030 and potentially up, kind of in the mid teens by 2034, 2035. And unless we rapidly start building out new electric generation, that's only going to take share away from consumers and industrial companies and cause those prices to go up. So, this is where if I had to speculate about what is going to kind of stop the AI train, if there is something, and, not that it stops completely, but
Mhm.
I think this issue of how are we going to power all these data centers is really the key question right now because, up until 3 or 4 years ago, I mean, we were in the midst of, a lot of climate change concerns, and we haven't built nuclear power plants for decades, and natural gas power plants. There's only so much natural gas in the ground. We're closing coal factories, so this power has to come from somewhere, and anyone who's dealt with permitting with in the United States, you don't just go out and decide you're going to build a nuke tomorrow
Yeah.
and in 2 or 3 years it's done. I mean, you got public backlash against it. You have to get permitting. I mean, these projects take 10 years if they happen at all. So,
Yeah.
you know, I personally think we're kind of at that. I hate to even use the word because I hate it, like tipping point of how are we going to sustain AI hysteria if there's not enough power to actually fund this?
Yeah. Yeah. No, I think it's a really good point. The question of if we're in a bubble, well, when's the end of it? So I think it's really helpful for people to understand that that's what it takes to actually make this happen and to provide all of that. But you're right. Yeah. I know I've seen and read kind of some of those things, or just some countries are better equipped to handle like the needs of that power that they need than we are.
I'm not saying this as any comment on climate change or environmental policy or anything, but seriously, 5 years ago, just 5 years ago, we were in Illinois. talking about decommissioning some nuclear stuff. We want to transition away from, kind of fossil fuels to renewables like solar and wind. And look, solar and wind is not going to power this stuff. It's just not. You can't get enough power, and it's not reliable enough to power a data center. I think we're just going to have a digestion period here where AI continues to kind of grow and advance and things like that. But a lot of the people that are throwing money into this stuff right now, or a lot of these commitments to throw money into projects, isn't actually going to happen because A, the money isn't there, and B, the power isn't there either.
Yeah, yeah. No, thank you. That's helpful. Well, I think those were all of the questions that we had that we really wanted to talk through today. So those were some of the big stories I know that we're hearing about that are affecting people. So again, this is a reminder that we're going to do these monthly. So yeah, as you're listening to it and hearing it on the news, we're thinking about it, but we're digging in, just like Rob's mentioning and kind of describing and showing with these charts that, there's so much more to it than just what do I buy and sell. And so these are the things that really you spend your time looking at, Rob. And I think it's so interesting and so helpful for people to see that too. And then even just like see charts and things like that, that you just don't see on the mainstream news. So let us know if these are valuable. Also, if you have specific questions that you would like us to comment on or, show information for, please feel free. You can email those to us. So just team@financialdesignstudio.com. And then also, if you're someone who's listening to this and you are not already a client, these are things, we're talking about with clients in our meetings. If you're not a client and you would like some help managing your investments, you can always go to our website, financialdesignstudio.com, and click get started so we can at least have a conversation, seeing what you need and how we can help you. Anything else you want to kind of add here, Rob?
That covers the two main things. I mean, there's a lot we could talk about. I mean, gold is and silver have been going crazy. I think that could be an interesting topic for next month. But I mean, really, the point is just to kind of communicate with people what we are watching, what we're seeing, and what our views on it. We're never going to be 100% right, but I think we just want people to be informed because as investors of our clients' assets and hard-earned
Yeah.
savings, we want them to know what's going on and why they're invested the way they're invested.
Yeah, I hope this has been a really great reminder just that, we are here for you looking at these pieces. When we're investing for you, we're investing so that your money is there when you need it. So we're looking at this all year, every year. So thank you so much for joining us. Thank you, Rob, for your time.
You bet.
And we will see you in November.